Hey guys, I'm just going to walk through how I backtest my trading strategy. In the most simplest way, no fancy programs needed, just Excel and your trading platform, which allows you to draw horizontal lines on it. Now I use MT5 platform, but you can easily just use something as simple as TradingView if you're not signed up to a broker just yet and you're just practicing. With TradingView, there is a replay function that you can use where it hides the candles and the bars for you, so you can backtest without looking into the future. But I know on some time frames, you need to pay for a subscription with that. So basically, the way that I am going to show you is a totally free way on the MT5 or MT4 platform, and just using an Excel spreadsheet. So I'll just go over to the spreadsheet here. So the way that this spreadsheet is set up is that I have a section for shorting trades and I have a section for going long. Now I put my entry level in, I put my risk level in, which is where my initial stop loss level is, and then I ultimately put in where I exit. Now, and then all the other cells, like the results cell and all the calculations, automatic formulas in my spreadsheet, and it'll calculate the percentage gain and loss for that trade. Now on the side I have an equity curve of the back-tested trades, and as you can see the ups and downs of the equity curve. This one's max drawdown, which is from that point to there, doesn't look too bad, so it looks about let's see, about 12 to 6, so 5 to 6% drawdown, max drawdown, which is acceptable according to my trading strategy. Down here I've got a few important values that I like to keep an eye on. The profit factor, which is ultimately your gross profit divided by your gross loss, and anything over 1 on your trading strategy over a substantial amount of trades shows a profitable system. I have the average win and average loss per trade, and my average strike rate, which is my hit rate. And you can see here I'm tracking at 49%, which is pretty much says that over 100 trades I have 49 profitable trades, which is all good because my average winner outweighs my average loss. And so that just goes in line with the age-old saying of cut your losses quickly and let your winners run. So I'll just show you on my trading platform how I backtest. Now I'm currently up to the date of, so I've backtested up until the 9th of March. So I want to do the 10th of March now. So this is the 9th of March on this section here. So I just go up to the date with my mouse, but I want to be careful that I don't get the slightest glimpse of what is going to happen in the future. Now on this dotted line, this dotted vertical line here is a period separator. I use this to show me the New York close of the day. So that shows me the New York close, and then it goes, there's a few hours of like a nothing period before the Asian opens again. So I want to get up to that time. So I'll go up to the dotted line. My trading strategy, I don't actually trade until after the Asian Open. So on here, on MT5, a trick I learned is that by pressing F12 on the keyboard, will move you one candle or one bar at a time. So it's really handy so you don't get to look too far in the future by accident. So with my trading strategy, I just have a look at the few hours before the Asian Open just to get an idea of what's happening in that quiet period, and then I wait for the open, and I don't really like to trade right on the open because it's a little bit too volatile for my trading strategy. So I just like to go a couple hours in and just see if there's any buying or selling pressure or a hint of the direction of the day that I can get in on. So I just keep going one bar at a time until I'm convinced of any pressure, buying pressure coming in or selling pressure. And there you go, I've got a a long white bullish candlestick just here. So that to me shows me that the bulls have come in, and we'll hopefully take that for the rest of the day, but we'll see how it goes. But I'm definitely going to be in that trade for the day. So once that bar closes and shows a bullish candle, strong bullish candle like that, I would enter if I was live on this. And my risk level, which is where my initial stop loss would be, by market structure, I like to put it obviously not too close. You don't want to get stopped out too quickly, but just below a key level, a recent key level. This is how I trade. A recent key level would be here for me, because this looks like it would be starting to do just a little, maybe just a slight trend upwards. So I like to put my stop loss just below the pullback there, which I would consider that a bit of a pullback. So there is my setup. So I'll go back to my spreadsheet and I will enter in these levels. They're my entry level and my risk level, which is 108,704. So 108,704, and my risk level is 108,506. So go back here, 108,506. Now, one bar at a time, and get in the mind frame of you actually trading money on this. So buying pressure's still there, a little bit of a pullback, but not enough to convince me that the trend is over. Still not enough to convince me. Buying pressure came straight back. If it breaks above that previous high here, I'm still in a bit of a trend. So breaks above, so I am in this trend. Looks good. Keep my eye on it. Selling pressure there. Still trending upwards. Still trending. Okay, I've got a bit of a selling pressure here relative to the other candles. It looks like a lot more volume, but it's still not enough for me to be convinced to get out of this trade. So I'll just see what the next candle does. Usually the next candle after something like this will show me whether I should be in or out. And there you go. So that candle there definitely shows me I should be out. It shows me that that initial trend that I've just got on has ended. So with that, it looks like I will take away about a 0.5% profit. And the way that I work that out just by looking at this is because my initial entry to my initial stop loss would be equal to 1% of my trading capital. And that's how I trade, that's how I risk manage my portfolio. And then, so 1% is that much there, so that's about half of that, so I'd say 0.5%. But we can have a look at our spreadsheet, that's what the spreadsheet's for. So our exit level is 108,801. So we put that back in there, 108,801. Yep, 0.49% profit. And then we go back to the equity curve, and there's my little 0.49% profit there. Right there at the end. Now it doesn't look like much, but cumulatively over a substantial amount of trades, that does work out to be a pretty tidy profit. Now you can see through this equity curve there's a lot of little losses, which is what you want, and then there's a lot of little and big gains there, which is what you want exactly as well. And you can just see here the average strike rate has just gone up, which is to be expected as well. And that's pretty much it. So I'll just go to the next one, and I'll just keep going like that. So so what I do there is just enter the levels where I entered, enter my stop loss level, and enter where I exited. Comes out with the result, go to the next one. Now I do that probably a couple hundred times a week just for brain muscle memory practice, and so when I go into live trading with real capital, I still have that strategy behind me, and I've practiced that enough to be in the mind frame of going live. So if you got any questions, just let me know, send me a message or whatever. And cool, thanks for listening.